Canadian inflation dropped from 2.9% down to 2.7%, but month-over-month inflation is showing some signs of acceleration. So the big question is the Bank of Canada going to cut interest rates at their next meeting or not? I'm Miles Noack of the Noack Mortgage Team, powered by Andy Mortgage, and today we're going to take a little bit of a look into the recent inflation data to try and dissect things and see exactly what things look like. We're going to take a look at what businesses feel, what consumers feel, and what the Bank of Canada might be thinking when it comes to cutting rates. So let's dive into this. The latest inflation data that came in showed inflation decreased down to 2.7%, as mentioned, from 2.9%, which is great. But the big thing the Bank of Canada will be watching and monitoring, as they've mentioned many times before, is that month-over-month inflation and what it is doing. And as it's showing signs of acceleration, this could put the Bank of Canada into a bit of a stickier situation where they may have to really think on whether they're going to cut rates or not. The other thing that was noticed in this was that Canadian consumers are more so being affected, or at least reportedly being more so affected, by higher inflation versus the actual higher mortgage rates that are available right now. Anyone that says the Bank of Canada is out here for just mortgage rates is wrong. They're not here just to prop up the real estate market. They're here to focus on inflation, the real estate market, and everything that's involved with that. The Bank of Canada also conducted a survey on consumers and their expectations, and it showed that consumers were confident that the Bank of Canada was going to be able to get inflation down to the target point by the end of 12 months to a year. But it also showed that Canadians really firmly believe that inflation is actually higher than what's being recorded by Stats Canada, which is something that hasn't really happened in the past. The other thing that was noted out of it was the fact that Canadians believe, yes, we're going to get inflation down to where we want it. But the big question is the Bank of Canada going to be able to maintain that? Another really interesting thing that came up was an article by Rob McLister. I've seen a couple of YouTube videos on it that he mentioned the quarter point or 0.25% rate cut from the Bank of Canada previously was like bringing a knife to a gunfight. Now, when I look at this, I don't honestly think this is a fight the Bank of Canada wants to win. When you look at what they're doing right now, what their mandate is, they're not looking to prop up the real estate market. They're looking at inflation. That's been what they've been looking at this entire time. That's their main goal. Another thing noted through all the data that's been released is there's been a really minimal amount of Canadian people who are looking and saying, oh yeah, no, I'm going to buy in the next 12 months. It increased by like 1%. And a lot of the first-time homebuyers or people who are renting, it actually decreased. And the number of sales is kind of remaining the same. The number of people saying they're going to sell their home over the next 12 months, it's all staying the same. So when we look at this information and the previous statement of a knife to a gunfight and stuff like that, and whether the Bank of Canada is trying to decrease rates for mortgage holders, I don't think they are. I think they're trying to fight inflation. I think they are concerned about the upcoming renewal wave of 2025, which we mentioned in a different video. But I really do think that people aren't necessarily waiting for rate cuts. I think they're waiting for prices to decrease. I think that's the bone. That's the sticking point. What really affects me is the actual cost of that home. So maybe, just maybe, people are sitting back going, do I jump off the fence into the real estate market because we've gone down half a point? Or do I wait longer to see if the prices go down with those interest rates? I think when we look at it, interest rate versus price, every single time prices. You could have the lowest interest rate on the planet, but if the house is worth $1 million and you can't afford $1 million, there you go. There's your problem. We also have to consider that in places like Vancouver, Toronto, or some of these larger centers where your average home price is $1 million, well, you can't do that unless you have 20% down. So they can't buy that house anyways unless they want to save up 20% or get a gift from mom and dad and stuff like that. I think that is something that consumers are really watching, is the cost of a home. And on top of that, even more so, the cost of goods and services. Because if all of a sudden the cost of goods and services come down and the price of a home comes down, it puts you in a position where you can buy a house a lot easier. Another thing that we look at when we're talking about rate cuts and the economy and all this other stuff is unemployment and businesses and the Outlook survey that was done on them. So unemployment has increased to 6.4%. Some people have said it could reach 8% by the end of the year. I really hope it doesn't. People losing their jobs sucks. We're not talking like, oh, look, data. No, these are actual people losing their jobs. 6.4% I think is high. It's increased from where it normally is. And businesses, according to that Business Outlook survey, are less concerned of a looming recession. And we've seen plunges in sales of discretionary items, fewer expectations of labor shortages. We're now seeing wage expectations to not increase. To be honest with you, yes, it sucks. It's not good for your average Canadian, but it really plays into to kind of what the Bank of Canada wants. They want to see our economy suffer a little bit. They're going to put us through a little bit of pain because they're desperately trying to avoid what's called a wage price spiral, where wages increase, costs of good increase, inflation increases, and so on and so forth in a big giant circle. I've said it before to many people, I would never in a million years want to do what the Bank of Canada has to do. They're literally putting Canadians through pain in an attempt to create ease. Who wants to be that guy? And that comes to our conclusion. What does this all mean? Inflation is easing, month-over-month data is concerning. Consumers are confident inflation is going to go down, but they're not really confident that we're going to be able to keep it down. Businesses are seeing slowdowns in sales, but also they're seeing slowdowns in wage increases, and we're seeing unemployment rise. And the big question about all of this is the Bank of Canada going to cut interest rates at their next meeting? Honestly, I, as well as anyone that is not the Bank of Canada, has no idea. We do not know for certain. The only people that know that are the people at the Bank of Canada. If I was to make an assumption, on a decrease, I'd say with the information that's come out, the odds of a decrease are increasing, and my gut feeling is we could see a small decrease at the next meeting, but only time's going to tell on that one. It's definitely something we're going to be watching, and you can expect more information out in regards to that after the next meeting on the 24th. Now, I'd love to hear your thoughts. So put your comment down below. Let me know your thoughts on the Bank of Canada and whether they're going to cut rates or not. If you found this video useful, if you found any useful information out of it, please consider liking and subscribing to the channel so that more people like you can see this video and so we can continue to grow. Thank you so much for watching. Hope you have a great rest of your day.